Hello guys, welcome back to this channel. I am Chiuzie Obinwa. I'm a digital marketing consultant, serial entrepreneur, and an educationist. I believe in education because it's education that liberates the mind, and when your mind is being liberated, you'll be able to achieve great things in life. So we'll continue with our stock market education. Stock market education. I have done a lot of video on the stock market, so you can go back. If this is your first time of watching my my YouTube channel or my videos, go back and go to my channel, subscribe to my channel, go to playlist. When you click on playlist, you see stock market, making profit on the stock market, stock market profiting system. Click on it, then you see all videos on the about stock market. So this picture you are seeing on the background is Nigeria Stock Exchange, where people who they just go there and start trading stock. But people like us, we don't go there. We stay at home and they are in our office and analyze stock and trade our own stock and move out of the market. So these people are brokerage companies or people that are managing some people's account. That is why they take it as this is what they want to do in life or something. But people like us don't have time to stay there. We just do our analysis and the trade and the we believe in multiple streams of income, so you can't stand on one single place. I love exposition. I love exploring things, learning new things, and moving forward in life. Okay, this one is NYSE. This is New York Stock Exchange Market. You just the picture at the background, the New York Stock Exchange. Alright, so let's continue. Now we look at there are some terms in the stock market industry. When I will start doing technical analysis, you will still understand more about it. So some terms like oversold, or you call it undervalued stock. These are stocks. The term oversold refers to a condition where an asset has traded lower in a price and has the potential for a price bounce. An oversold condition can last for a long time, and therefore being oversold doesn't mean a price rally will come soon or at all. Many technical indicators identify oversold and the overbought levels. Yes, that's what I told you. Technical analysis are very, very important in the stock market, So when you hear that company stock has been oversold, that means people have sold, they have made a lot of profit and they have sold a lot, and their price will go down. If you buy as of that time, that means you have to wait like hell before if you are not a long-term trader, you have to wait like hell for you to make your profit. But if you are a long-term trader, that's your own. If you're a short-term trader, a swing trader or day trader, if you buy, you are in trouble. So that is why technical analysis or technical indicators are very important for you to identify when a stock is going oversold, so that you get out of the market immediately and make your profit. Okay. Now, what does oversold tell you? Oversold to a fundamental trader means an asset is trading well below its typical value metrics. Technical analysis are typically referring to an indicator reading when they mention oversold. Both are valid approaches, although the two groups are using different tools to determine whether an asset is oversold. Now, technically oversold. Traders can also use technical indicators like RSI, MACD, moving average, volume, and so many of them. And see whether a stock is being oversold or is it good, when to enter and when to get out of the market. So use technical analysis and do that. So we shall be giving you the information here on the channel if you subscribe and click on the bell icon, so that you receive videos when I'm doing those, using my skill and teach you how to do it yourself. Alright, key takeaway, the things you have to understand in this is that key takeaways in this training: oversold is a subjective term, since traders and analysts all use different tools. There's so different tools to identify these things when a company is being oversold or overbought. Some may see an oversold asset while others see an asset that has further to fall. Now, oversold condition can last for a long time, so prudent traders wait for the price to base out and start to move higher before buying. Yes, when a company's stock is being oversold, you have to wait. As a trader, you have to wait for it to, or if you really want to buy it, you have to wait. Go and search for other opportunities. Wait for that. If that one comes back, you enter the market and buy. When it rises, you sell as quick as possible. Alright, oversold conditions are identified by technical indicators such as the relative strength index, which is what? RSI, relative strength index. This is a very strong tool you can use to identify when a company's stock is oversold or overbought. We have another one, which is stochastic oscillator, as well as others. You can use those indicators to identify and know what to do. Fundamental can also highlight an oversold asset by comparing current value to prior values in terms of price, earnings as PE, and so on and so forth. Okay, let's look at a picture of a chart. Now, this picture you are looking at, this is the second chart you are seeing. Is the first chart you are seeing is a candlestick chart, but the second one you are seeing, look at it, you see RSI, relative strength index, RSI. So when you see, okay, all right, so you see oversold here at the top of this line that is red. You see overbought there. When you see that line, those zigzag line crossing that red line between 70 and above, that means what? It is overbought. Now look down, you see oversold at the down, you see 30%. When you see that zigzag lines cross down to that green line between 30%, you know that is oversold. Yes, oversold. That is what? Under RSI analysis. Okay. Later I will show you more live training that will help you. Live training, so you see everything as I'm doing it and trading it live. Okay, so let's look at overbought. If you don't call it overbought, you can call it overvalued stocks. Overbought or overvalued stocks. Now, these ones is stocks that have significant increase, as a massive increase. Why people bought it? Many people jumped into the stock market, into the stock. So stocks that have significantly increased in price due to a large demand are called overbought. stocks that have significantly increased in price. Why? Because so many people have jumped into it and bought it. So that's when it's called what? Overbought. Now this is often the case when there are too many buyers who push the price so high that it can't be justified by company financials. So that is that when too many people are seeing positive impact in that company, and they are buying and buying and buying and buying, so the price will continue to jump up and jump up and jump up. Like this 2020, December 2020, there was a very massive profit intake in the Nigeria Stock Exchange. Very massive, very massive. So that is the thing. And people who bought stocks sold. People who bought stocks before that massive profit, they took a lot of profit and they get out of the market. Okay. Now, overbought refers to a security which has been subject to a persistent upward means increase pressure, and that technical analysis suggests is due for a correction. So that is the thing. So when a stock's price has risen to a significant level, a very significant level, what is it telling you? It's better you sell that period. Sell it. Don't wait more. Sell it and take your profit, because the price will begin to go down as fast as possible. That's correction. Correction means it will be stepping down as soon as possible. When you notice you have massive profit, get out of the market. Because if you stay there, when the correction begins to hit you, even the profit, you begin to lose the profit that you have made. Okay. The bullish trend may be due to positive news regarding the underlying company, industry, or market in general. Buying pressure can feed on itself and lead to continued bullishness beyond what many traders consider reasonable. When this is the case, traders refer to the asset as overbought, and many will bet on a reversal in price. Let's look at this pictorial picture. Okay, the same thing. So you can see the picture, say overbought area. You see the arrow between 70% or 70 this thing on the RSI. So that is the thing, the overbought. When you notice on the technical RSI as an indicator, you will just sell. And when you look at it, when it jumped to that 70, you see the zigzag lines. It has touched that line there. It begins to move down. It begins to move down. So that shows what? It has been overbought. So the next thing that will happen is what? The stock price will be stepping down. If you don't sell, you begin to lose the profit that you have made. The key takeaway: overbought refers to a security with a price that is higher than its intrinsic value. Many investors use price earnings, that is PE, ratio to determine if a stock is overbought, while traders use technical indicators like the relative strength index. So we traders, we use technical indicators, while investors use their own, but we traders use technical indicators to identify these things and get out of the market. Just like I bought some DDD, that's international stock. Is it yesterday? Yes, yesterday. So it has risen to 24%. Yes, 24%. Risen to 24%. So stock market is good when you like buying international markets. You buy with dollar, and the dollar exchange. If you are in Nigeria, dollar, Nigeria, naira, when you buy when dollar is low in Nigeria, and by the time you want to sell, dollar might have risen. So as you make profit in the stock market, you are making profit in the currency exchange as well. So that is the thing. Okay, so fundamental analysis can also be used to compare an asset market price to its predicted value based on financial statement or other underlying factors. Now, ultimately, overbought is a subjective term since traders and analysts all use different tools. Some may see an overbought asset while others see an asset that has further to rise. So these are the things. Use different tools and different indicators. So the one you are using, make sure you master it, which I will tell you more on this channel. So please subscribe to the channel if you have not done so. Do what, subscribe to the channel. If you have any question, go to the comment section and ask you any kind of question you want to ask. I will be able to respond to you. Then stocks that have increased the most in price, that is top gainers. Those platforms, that's brokerage account that you have, under their news, they will show you the top gainers for the day, the top losers for the day. Those things will give you information and help you to make more decisions. You have top gainers and top losers and thereabout. So subscribe to the channel. We'll be giving you more information on trading in the stock market. I promise you, stock market is good. You can make money from the stock market if you are not greedy. In fact, in every business, if you are not greedy, you make your money and go. I still tell you, multiple streams of income, very important. Just like a stock market, just like you opening your shop. Somebody that opens his or her shop. But the one thing with stock market is that you already has the tools, the shop, which is your phone or your laptop, with internet connection. You invest, analyze, invest, and move out of make your profit and move out of the market and look for more opportunities. So thank you very much. Thank you very much, and God bless you.